Coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, February 28th, 2011. The grains, little surprising, if you will, for a Monday. Usually we'll see these markets rally pretty good on a Sunday night. We saw some strong closes on Friday. Was expecting that to carry over a little bit here today. Coming to the office this morning, the overnights were done trading, and we were lower. We were lower in the corn, beans, wheat, and calls. Consequently, were also lower out of the gates this morning. We were looking for a lower open across the board. Corn, as the day went on, traded both sides of unchanged and actually found some strength into the final hour or so of trade. Crude oil being off of its highs at that point by about $2, trading lower on the day. The dollar being down significantly today. Corn still finding some strength. Wheat and soybeans again lower at that point. Wheat did find some strength into the close, and the beans off of their lows, but still lower on the day. So where did we end up when all was said and done? Well, your March contracts are in delivery now, so your volume is shifted into the May contracts. May corn at 731 is where they settled up today. That was 9 higher on the day. Soybeans down 10 1/4 at 1364 3/4, and you had wheat in the May contract up 5 3/4 at 817. Again, crude oil lower, the dollar lower. The dollar right now down 37 points at 76.93. All right, we're taking a look at the contract lows down here in the 76-point range. So keep an eye on that. We take that out. That may be friendly for grains. I don't know. The relationship between the dollar and crude and how they translate into market movement in the grain commodities, they really have divorced themselves. Those relationships have meant very little here recently, but it's important for all commodities to keep an eye on the dollar, find out what it's doing, and then go pick your entry point into the long side of most commodities. So keep an eye on that 76-point price point there in the dollar. Crude oil down 94 cents right now. 96.94 is where that sits. We got up above 99, 99.34-ish, I believe, was an important point today, and we're back off of that significantly. So down 94 cents on the day in the crude. Cattle markets today, livestock overall, very surprising. We had a very strong open in the feeders this morning. We had cash trade $1 higher last week. We have select gaining in abundance now over the choice cutouts in the cattle market. So there was reason to be excited this morning out of the gates, but not as excited as we probably opened up. A minute or two into the trade, we were $1 plus higher in most feeder contracts. We finished the day up 25 cents in the nearby, 130.07 That's March feeders, up only 25 cents, about $2 off of their highs on the day. Fat cattle, actually pulled back today off of their highs significantly. We did have the Feb cattle go off the board today. Today was expiration day, so some squeezing going on into the noon hour here when that contract expired. April cattle down $1.20 on the day, 112.90. All right, so if you look at the charts, you'll see where we were earlier in the day and where we finished up. It was one of those, whipsaw type days where we're going one direction real strong for a percentage of the day, and then boom, something happens and the market pulls apart. Saw some profit come out of the cattle from respect traders today here. And the hogs down $1.40 today as well, 88.80 in that April contract. So there's a lot of news going on around the world as far as Middle East, unrest in the Middle East. What's that mean for crude prices? What's that mean for food prices? China now putting up their defense, if you will, against any type of protesting out there. Very interesting times that we live in. Keep your eyes and ears open, looking for new news, international news, because that seems to be what these markets are focusing on. What's going on in the Middle East as far as oil production? Are the Saudis going to keep producing higher levels of crude, or are they going to shut the valve off a little bit and see if these prices are going to spike higher, which they've told us they're not going to do. So we'll see if they're true to the word that they're making public right now. Keep oil prices stable, if you will, for the time being, if $100 a barrel is stable, while the unrest in the Middle East becomes rest in the Middle East. We'll see. What's going on here at Allendale? We started our annual acreage survey. We want to know what you're planting and how much you're planning on planting this year. We kicked that off today. That'll run until next Friday, I believe. Feel free to call in here, 800-262-7538. We'll be more than happy to take your information down, and that's actually how we produce our results, is through what the farmers are telling us, what our clients are telling us they're doing. And we've been very accurate with these numbers historically. So we need your help to make that true again. This year we're also offering the access to the website where you can go in and plug the data in on the web page without having to talk to anybody. That can be found at www.allendale-inc.com. Go ahead and put your information in there. And we're going to have a little unique way of presenting this information this year. We're going to have a live webinar. All right, Rich Nelson is going to conduct this. This is how we are going to relay our results to the public, is over this webinar. So registration is limited. The server can only handle so many connections, so sign up early and get your spot so that you can be there for the live presentation of the results of our survey. If you have any questions on how to make that work, feel free to call in here, ask for Greg McBride, and he should be able to help you out. Otherwise, that's my wrap-up for Monday, February 28th. If you have any questions, feel free to give us a call here. Thank you for your time, and I'll talk to you again soon.